Welcome back, traders and investors. We have another guest on the line here, Karl Setzer. He's a grain market analyst at MaxYield Grain. Karl, how you doing today?
Doing quite well. How are you today, Joel?
Good, good. Last time we talked to you, these grain markets weren't doing too well. Do you got any updates on the yield estimates coming up?
Yeah, we're going to see some. The official yield estimates will come out this Thursday at 11 o'clock Central Time. Really, what we're looking at from the last time we talked here, maybe a little bit of a bump in corn coming from the August into the September supply and demand report. Historically, very few changes, but some of the yield reports we got coming in from where harvest has been taking place, I think we're going to see corn maybe bumped up bushel and a half, soybeans maybe a half a bushel. I don't expect some real big changes coming up here this month, but I do think we're going to see some increases.
Okay, so that most likely is going to have a negative effect on the prices, then a continued negative effect.
I think we're going to see some price pressure continue from these. I don't know how much more we can put them at this point, Joel. And the reason is, a lot of these bigger yields are already factored in.
Okay.
So by the time they get, we get them in print, it's a little bit of old news already. And trade actually, I'll start looking forward to future supply and demand reports. October is probably where we'll see a bigger change because we have a little bit better yield estimate, a little bit better data. And we also have the corn yields. They'll take the ear weights, the test samples, and everything else. So we'll have a little bit more accurate numbers there. I think October is when we see the big numbers change. As far as additional price pressure, right now we're starting to get to a little bit of some volatility on the bottom side. I think our downside might be limited from here on the way out, Joel.
All right, so in anticipation of these numbers, do you change your square up positions or square up your hedges at all and wait for the number and then react, or do you try and react right when when those numbers and that data is released?
I never try to outguess a report, Joel, and the reason is that that'll lean you a little bit towards speculation, and I'm a hedger, and I kind of a little bit reactionary in the market. I like to have a plan in place and stick with it. And of course, whatever you see for data when it comes out in a report, I'll change my opinion almost immediately sometimes. But in order to, really pull anything ahead of myself, I might put some options on just in case, a big move, in case yield is decreased in this. There's a little bit of a gamble there. I might put an option or two on and look at it that way. But to ultimately change my overall perspective of the market, I want to see the data and see not just a knee-jerk reaction in the market, but I want to see what the long-term reaction is going to be before I would change my entire outlook and my philosophy on the market.
So if there's if there's a little bit more yield coming, that's putting a negative pressure on the prices of the grains, is there any concerns over the quality of the grain that's coming out of the ground?
We're going to see a little bit of that as we get going here. Right now, the corn is coming out in pretty good shape. The concern with quality that we may see would come a little bit further up when harvest gets up into Minnesota, the northern parts of the Corn Belt. And the reason being is that corn needs a little bit longer to mature. Looking at the temperatures this week, there's a lot of talk in the market of a frost. I really don't see that being a huge factor. I don't think temperatures are, in any forecasts I've seen, are going to get that cold. But what will happen is if we do happen to see an early end of the growing season, it could be a precursor to some quality issues a little bit later in the marketing year. And I'm talking almost 12 months out, such as we're seeing right now. When crops can't fully mature, a lot of times your corn has to be dried, comes out a little bit wetter, and that creates some problems with some fines in the bins. There's some talk in the soybeans, if we get an early frost, that it may affect the oil content, but there's a lot of what-ifs there, and we need to see them really come to fruition before we start to factor them into the market values.
Okay, and more information. You said it will be coming out in October. How late do they harvest grains in the Midwest and then also in other parts of the country?
Usually in the upper Midwest here, through Iowa, we tend to be done by in a normal year by the end of October, first part of November. You get a little bit north of us, you get into the Minnesota, the Dakotas, Wisconsin, up into Michigan. A lot of times it can be right up until the Thanksgiving holiday. Depends a lot on the weather, and we have had a little bit of a switch to a wetter forecast here, which could delay things. But we're going to see some soybeans come out here in central Iowa through northern Iowa in the next 10 days, 14 days. So we're getting a pretty early jump on it. I think we're going to be okay this year. I don't see any huge delays coming in the foreseeable future anyway, Joel.
Okay, so do these lower commodity prices in the grains, does that necessarily spur more demand?
It usually does, and I say usually. One of the changes we've seen in the last few years in the market is we've went from having a U.S. demand-driven market to a globally demand-driven market. Even though our prices have dropped, we have to remember that South America's prices have dropped. We've seen the Black Sea's values drop. So we need to remain competitive even where we're at. With currency values and the fluctuations, that makes it even more of a difference. I think we are going to see some ethanol demand maybe perk up a little bit. There's a lot of talk of feed demand increasing in the near future. I personally don't see that because I don't know where we're going to get the feeder cattle from, and that could be a whole other story. But the big one right now we have to look at is exports, and we do have to remain price competitive. If we look at the global supply and demand numbers, the global market is flush with corn, soybeans, and wheat, and that's going to keep us from seeing the huge demand increase that we normally see with lower commodity values. But we sure shouldn't see demand slip any in the new crop marketing year.
Question here. How is the harvest shaping up in Western Canada for wheat and barley, et cetera, and what effects will that have on current prices?
I haven't heard a tremendous amount of news on the harvest up there. As far as the U.S., affecting our market, I really don't see having a huge impact on it right to begin with. We do have a lot of wheat that just hit the market, the cash market. So I think we're trying to deal with that a little bit more than what we are with what's going up in Canada right now.
Okay, and just your final thoughts here on the grain markets. Obviously, farmers are not too happy. I mean, unless Karl's did some good hedging for them. But, just a slow, steady decline here in these grain prices. You think there's anything that's going to be coming out of this recent report that might change the fundamentals around and turn these things around?
The one big thing I want to look at is any potential yield change, and it's not uncommon. And one surprise that we could see, and it's not uncommon, once the USDA has, and not so much on corn. I think on corn we're pretty much set. I think on corn we're going to be on a steady grind for the next, at least 2 weeks until we get to September 30th. The stocks report on the 30th is going to be a little bit bigger factor than what we see this coming Thursday, Joel. But I think on soybeans, there might be a little bit of a sleeper there. It's not uncommon to see soybean yield actually cut a little bit sometimes between August and September rather than increased. If we see just even the slightest decrease in soybean yield, I think that could be a little bit of a sleeper that could, I don't think we're going to see prices skyrocket by any means, but I think we could see a knee-jerk reaction to the upside as we move forward here. And, of course, soybean stocks. The 140 million bushel carryout on soybeans has been questioned over and over. If the USDA would come in and maybe cut that a little bit, even though we're into the new crop marketing year already, that right there could be a factor that could send a shock through the market.
And maybe send the beans back to the teens, so we will keep an eye on that. Karl, thanks a lot for coming on, and we hope to have you on again.
Absolutely. Thanks for having me.